I'm joined now by Andreas Weilby. He is the co-head of the investment department at Kirstein Investment. Andreas, thanks for joining us. First of all, for those that don't know, what's Kirstein Investments all about?
So Kirstein, we are a Nordic-based consultancy, working with investors in the Nordic, where we advise them both on different traditional elements within the consultancy arrangements. We also work with asset managers throughout the pan-European region, assisting them alongside their strategy and investment plans and approach to investors. My department, investments, where I co-head, work with Danish pension schemes mainly, Danish foundations, insurance companies, assisting them on strategy, tactical, operational elements of their investment.
Well, I guess one of the big issues in investments at the moment is how expensive fixed income is looking and how expensive it's looked for so long.
Yeah.
Where can you find, or can you find anything in the fixed income market that gives that traditional risk and reward balance that we would have expected 10, 15 years ago?
No, you probably can't.
Yeah.
That's the short answer. Not if you put in perspective to 5, 10 years ago. It's a different game, definitely, but we still find that there's interesting area to focus on. And I think over the last couple of years we've seen an extreme move, especially in the Nordic, towards the liquidity premiums within fixed income, being private debt, infrastructure debt, and the likes. What we found is also that there's actually another premium in terms of complexity premium. So if you have the opportunity to sit down and really dig into some of the perhaps more different asset classes, you can still find areas of interest where you can get some additional yield. And the next question is, do you get the diversification you would expect and hope for?
Yeah.
That's more difficult to say in the current environment. But if we take the likes of CLO, for example, that's an area where we did a lot of work last year and actually invested into the beginning of the year, mid-February, so we timed that quite well, I think, luckily. But we focus on the more higher grade in CLO space, where you can actually get quite a decent premium relative to what you can get in traditional investment grade space. So that's definitely one of the areas you can do some.
But if there were an unfortunate event in the markets, and as they always say, correlations always go to one in times of stress, would you expect these other forms of investment you're talking about to correlate to one? Or
Sure. I would say CLO has such a bad name historically, not because of CLOs, but more because of the similar fixed income types, CDO, for example. So we will probably see some pressure. But if you're an investor and you're ready to ride the wave, I think you could definitely pick up a decent yield that you wouldn't be able to get in investment grade, for example. And you can say it's not a duration effective as duration sensitive as investment grade is.
Okay. Now, one of the other things we're seeing a lot of at the moment is this huge growth in ESG and its so-called impact investing. Is that with us to stay, and is it genuinely a source of alpha for portfolios?
ESG is implemented in so many different ways. There's no formula for ESG, but I would say ESG has come to stay, especially in the Nordic region. Many would say there's a part of a first mover mentality in the Nordic around ESG. But I think it's important to have ESG as part of your strategy, not just a negative screen or something you implement in the last end. The most institutional investors, if you can say so, don't do that approach either. It's much more detailed, and what we've seen over the last couple of years is that the starting point for some is implementing in their risk, others implement it in their philosophy and process, try to see if they can add value from ESG as well. And if we look at some asset classes, some have been quite successful doing so.
So you really have to, if you're going to do it 100%, get embedded in your process.
Do it as part of your process, not just as an extra layer that you have to do because some investors want to have it as part of your strategy.
We have to leave it there. Andreas Weilby, thank you very much.
Thank you.